Hey YouTube, this is Zach with Achilles Financial, and today I want to talk about Credit Suisse. And this is a company that is the large bank over in Switzerland. They are a massive financial institution, and there's a lot of news right now about the potential liquidity crisis over at the bank. Following a lot of leveraged FX trades or foreign exchange currencies this year, as well as a large decline in the company's stock price. You can see down from north of $10 a share at the beginning of this year to below $4 a share at current point in time. There is a running concern with the bank's capability to stay afloat. That being said, I would call out that right now you're starting to see a lot of talk, a lot of fear mongering about the idea of a liquidity crisis as well as a infection point where you could see this parallel or go across to other large financial institutions. And while I am by no means going to be calling out a potential yes or no statement associated with some of that fear mongering, I do think that this is something that is getting a lot more headline coverage because it's worrisome than is actually probable to happen. But I'm by no means a financial advisor, I'm just some guy on YouTube. What's happening, though, is they are placing a lot of leverage trades from the investment bank side that are not performing very well this year. Whereas some of the other stocks that I follow very closely, such as a Bank of America, has seen similar, albeit slightly better, deterioration this calendar year. Bank of America tends to perform better from the banking or commercial banking, consumer banking side than the investment banking side. So you're seeing continued deterioration in stock price both in Bank of America, JP Morgan, Citigroup, and Wells Fargo. However, despite the fact it's not as bad as Credit Suisse, I do think that there is going to be more benefits to owning a larger commercial and consumer bank than an investment bank such as Credit Suisse, such as Goldman Sachs, Morgan Stanley, because they have a lot of that leveraged exposure. That being said, when you look at the company itself with Credit Suisse, they continue to have a relatively strong balance sheet as of the last quarter. Admittedly, there continues to be pressure on their leveraged funds or their leveraged portfolios. But from a loan perspective, they continue to grow loans. You also continue to see that they have a fairly strong cash position. However, the issue that they are going to continue to have is their liabilities. They continue to have an incredible liability load that is primarily going to be due in the short term. What I'm going to be looking for is what happens from this long-term debt, which they have been continuing to reduce, and what are you going to see from a short-term debt perspective? How does this perform for the company? They do plan to do quite a bit of restructuring this calendar year, and the CEO did come out this past week and say that they had they had the capability to maintain capital as well as liquidity requirements. That being said, I do expect that they are going to look to bring on additional investors to bolster that capital position. Something that I would call out is they are an ADR. This is a foreign company trading on the US stock exchange, which means that you have very little capability to get any additional money should the company go bankrupt or go through a restructuring where they don't pay out the US investors. So keep that in mind, as well as generally speaking, you're going to have fees associated with owning these shares. I do expect more to come out this week associated with the company. However, it's important to note that I think we're going to continue to have poor performance in the investment banking side. I don't think that that necessarily is going to lead to systemic risk over some of these larger financial institutions, despite the fact that they play in foreign exchange and leveraged bets. So at this point in time, I'm not purchasing or looking to buy into CS or other similar investment banks. But I do think that if you see some of the sector performance and deterioration in other larger commercial consumer banks, in particular JP Morgan and Bank of America, I would look to be a buyer there. But again, I'm just some guy on YouTube. Well, if you've made it this far, please leave a like and subscribe. It really helps the channel to grow. And let me know in the comment section down below your thoughts on the Credit Suisse environment and what's going on there, as well as the broader banking sector. Thanks for watching, and I'll talk to you later.